Welcome. In this video, did the XCN coin break the pattern to the upside? We will analyze this. Don't forget to subscribe and like, and please watch to the end to understand. One of the most striking structures on the chart was the clearly formed falling wedge pattern. This formation is commonly seen in technical analysis near the end of downtrends and is considered one of the bullish reversal patterns. The main feature of the pattern is that both the descending resistance line from above and the ascending support line from below converge, causing the price to compress within a narrowing structure. This compression represents indecision and low volume in the market, while also signaling that a breakout is imminent. In this falling wedge pattern, price movements oscillated within the narrowing structure for a certain period. Each peak formed at a lower level than the previous one, while the troughs found support at increasingly higher levels. Technically, this indicates that buyers are starting to take a stronger position, while sellers are losing strength. In other words, the downward momentum has weakened, setting the stage for a potential upward breakout. Eventually, the anticipated breakout occurred. The price broke through the upper boundary of the wedge, defined by the descending resistance line, with a strong candlestick signaling a bullish breakout. This is considered a very positive sign from a technical perspective, as falling wedge patterns typically result in price reversals and the beginning of a new upward trend when broken to the upside. Following this breakout, the market's psychological atmosphere begins to shift. Investors recognize the end of the downtrend and start seeing new buying opportunities. It's also notable that this breakout occurred with above-average volume. Not only did the trend line break, but the presence of strong volume behind the move further validates the pattern's reliability. Breakouts with volume indicate that investors have greater confidence in the market and are more willing to buy at these levels. Therefore, the breakout from the falling wedge can be seen not only as a technical event, but also as a psychological turning point. A pullback toward the upper trend line of the wedge after the breakout is also quite natural and represents healthy market behavior. Such retests help lay a more solid foundation for new upward moves. What once acted as resistance now turns into support. As the market prepares for a new rally, maintaining price above this level boosts investor confidence even further. Recovery signals after the retest offer hopeful signs that the uptrend may continue. The breakout targets of falling wedge formations typically carry upward potential equal to the widest part of the wedge. That means from the breakout point, a price increase matching the distance between the highest and lowest points within the wedge is quite likely. This shows that the price still has significant room to rise and that the potential hasn't been fully realized yet. Moreover, breakouts from such formations may not just signal the start of a short-term move. If the breakout occurred on a larger time frame, it could be the beginning of a much longer-term uptrend. Larger patterns on broader timescales often determine the primary direction of the price and usually indicate trend reversals. That's why both technical analysts and professional investors closely watch these types of structures. In conclusion, the upward breakout of the falling wedge formation indicates a technically positive shift in the market and suggests that the downtrend is beginning to end. This breakout shows not only that the downward pressure has eased, but also that the price may now target higher levels, allowing investors to position themselves accordingly. However, we can't rely on formations alone to make a final analysis, so let's take a look at the other metrics as well. Stay tuned. One of the notable structures on the chart is a small-scale inverse head and shoulders (H&S) pattern that has largely completed its formation. In technical analysis, this pattern typically appears toward the end of downtrends and serves as a strong reversal signal, indicating an increasing likelihood of a trend shift to the upside. Although this pattern is not large in scale, it still holds the potential to significantly impact price movements. In this structure, the price initially bounced back after decline, forming the left shoulder. This was followed by a more pronounced drop, which created the head portion of the pattern. Then the price recovered again, forming a low that is not lower than the head. And now we can observe that the right shoulder is nearly complete. This situation indicates a technically positive development because all the key elements of the pattern have formed and only a break of the neckline remains. The neckline is defined as an imaginary resistance line connecting the peaks of the left and right shoulders. Once this line is broken, the pattern is technically considered complete, and an upward move toward the target level is expected to begin. Currently, the price is moving very close to this neckline. If a breakout occurs at this level, a new wave of buying could begin, and the price may quickly move toward the projected technical target. What further strengthens this pattern is its proximity to significant levels that previously acted as resistance but have since become support. Additionally, the observed increase in volume during the formation process shows that buyers are becoming more active and that the market is preparing for a reversal. Typically, in H&S patterns, a noticeable rise in volume occurs as the neckline is broken. This volume surge confirms the strength of the breakout and increases the likelihood of the price reaching its target. At this point, there's another key detail investors should be aware of. The target of the H&S pattern is calculated by adding the vertical distance between the head and the neckline to the breakout point. This measured move represents the estimated price level the market may reach if the neckline is broken. Reaching this target is not only a validation of the technical analysis, but also an indication of the strength of buying pressure in the market. This small yet effective H&S pattern has the potential to serve as a precursor to short-term trend reversals. The small size of the pattern means that the target level could be reached more quickly, offering a faster outcome for investors taking positions. At the same time, this pattern could be a precursor to larger inverse H&S or ascending structures forming on higher timeframes. In other words, the success of a small pattern may lay the foundation for larger formations. In conclusion, this small inverse head and shoulders pattern, clearly visible on the chart, presents a highly optimistic technical outlook. With the right shoulder nearly complete, attention now shifts to the neckline. If the price breaks through this level strongly to the upside, the pattern will become active, and the likelihood of the price reaching its technical target becomes highly probable. It's important for market participants to consider such structures when developing strategies, as doing so can help minimize risk and allow for better timing of entries. When analyzing the MACD indicator, a noticeable upward momentum in the lines has become evident in recent periods. This can be interpreted as a very positive development in terms of technical analysis. MACD is one of the most reliable oscillators used to measure market momentum and trend direction. Therefore, the direction of the lines significantly reflects the internal dynamics of the market and the psychological tendencies of investors. In particular, the fact that the MACD line has started to move upward together with the signal line indicates that the bullish trend is gaining strength. As the angle between these two lines continues to widen, we can say that momentum is also increasing. In other words, buyers are beginning to take control over sellers. If such bullish formations are clearly observable on the MACD, the price is expected to move in parallel with this behavior. MACD generating upward signals in this way is not only a sign that the current trend will continue, it is also considered one of the early signals of a potential upward movement. This is because the indicator usually gives a signal before the actual price action. That means positive signs appear on the MACD before the price starts to rise significantly. This provides a critical advantage for investors looking to enter positions at the right time. The MACD histogram also provides important insights at this stage. The histogram bars forming above the zero line and growing in size indicate that buying momentum is accelerating. This typically occurs at the beginning or during the continuation of a trend. If the histogram bars remain in positive territory and continue to expand, this suggests that the upward movement is not just temporary, but is backed by strong volume and demand. Therefore, the current MACD outlook shows that the market is quite eager to move upward. Additionally, the MACD moving upward from below the zero line is a classic signal that the bottom levels are behind us and a new bullish phase has begun. Such signals are especially valuable for markets emerging from a downturn. A prolonged horizontal movement below the zero line generally represents a consolidation period. The MACD indicator should remain on our watch list. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.